Hello and good morning, ladies and gentlemen. Here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlooks. Starting as usual with a short coverages of the main markets we cover. North American markets first, of course. The Dow Jones yesterday, not much movement sideways. The Nasdaq did almost 20 points up though. The Dixie was changed just a little bit up to 95 mark. The USD Canadian dollar was 150 pips up. Canadian interest rate remained unchanged, 0.5%. We had statement, monetary policy reports, and press conference. The Bank of Canada is downgrading its economic outlook again as the country continues to grapple with the complex aftershocks of lower prices for oil and other commodities. As expected, the central bank kept its key overnight lending rate unchanged to 0.5% yesterday, following two surprise rate cuts earlier this year. After nearly hitting a recession early this year, the Canadian economy will grow just 2% in 2016 and 2.5% in 2017. This is what the bank said. That's down from previous forecast of 2.3% and 2.6%. Lower oil prices are continuing to slow business investment and put a dent in the value of Canadian exports, overwhelming improvements elsewhere in the economy. And the bank warned that the two-track economy will persist longer than expected in spite of the positive effects of earlier interest rate relief and the cheaper Canadian dollar. The bank's more sober outlook could delay eventual interest rate hikes in Canada, just as the U.S. Federal Reserve appears poised to start raising the rates there. This could push the Canadian dollar, now trading under 77 cents per U.S. dollar, even lower as investors seek higher returns in the United States private sector. The economists there suggested that Canada's economy could gain a lift next year and beyond if the newly elected Liberal government makes good on its promise to boost infrastructure spending and cut some of the taxes. That could take some pressure off the bank to cut rates again in the new government if the new government moves quickly to get money out the door. Again, the United States dollar versus the Canadian dollar jumped 15 points yesterday. Retail sales, excluding autos, month on month and on Friday, CPI reports in Canada, initial and continuous jobless claims, Chicago Fed National Activity Index, property market reports, and CB leading indicator, both month on month, are due today for the US dollar. Moving to the European markets, the German DAX 30, 60 points up yesterday. French CAC 40 didn't move much, just a little bit to the red. Today, we have ECB interest rate decision, monetary policy statement, followed by press conference, the EU consumer confidence indicator, the SPA unemployment rate, French, that's the Spanish, of course, French business climate, Italian trade balance, non-EU, and on Friday we have European, Germany, and French market services PMI reports. Asian Pacific markets, yesterday the Japanese Nikkei 225 went 250 points up. Today is going a little bit sideways. Asian stocks rose, extending a global equity rally. And Malaysia's ringgit headed for its best week since 1998 as investors piled back into riskier assets amid speculation the Federal Reserve won't be raising interest rates until risk from outside the U.S. subside. Yesterday we had two reports from Japan, foreign bond investment, 566.2 billion yen, less than previous, indicating capital outflow, as well, and foreign investments in Japan stocks, now 29 billion yen from previous 523.5 billion yen, indicating again capital outflow. Most Chinese stocks rose as technology and healthcare companies rallied ahead of top-level Communist Party meeting which is due next week, to discuss the nation's economic and social plans for the next 5 years. We also have Kaishan manufacturing PMI reports tomorrow. On the commodities front, the S&P 500 index had a range of almost 30 points yesterday, nearing 2020 mark right now. Crude Oil Stock Change surged sharply for a second week, climbing 8 million barrels on the week to October 16. Oil prices edged up in Asia trade yesterday, up this morning basically, gaining support from the weaker dollar to hold above a 3-week low hit in the previous session after bigger than expected build in the U.S. crude stocks added to concerns of a global oil glut. The WTI had a $1.30 range yesterday, currently at $45.40. Gold fell considerably yesterday amid a slightly stronger dollar as continued weakness in China and the timing of a potential interest rate hike by the Fed remained in focus. Yesterday, the yellow metal had a range of $16 per troy ounce, trading at $1,165 per troy ounce right now. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.